Bitcoin. And just to be clear, that's kind of my best case scenario is 12 to 13,000. My worst case would be like 3,500 or so. So hopefully it's the best case. But again, as a trader, we always have to prepare for the best and the worst case. You just can't kind of stick your head in the sand and say, oh, I'm only going to believe in the best case. As a trader, you have to mitigate risk. So you have to prepare for the potential for the worst case. Charts get me excited too. I mean, it's awesome. It's weird because you have there's so many people out there that hype things and kind of push things. And then if you just look at the charts, to me, that's the most exciting because you just never know when you're going to find the next great trade that's based on fact, which is based on actual technicals that can pay you out thousands of dollars. So it's interesting to look at the stock market, and for once we're seeing more volatility in the stock market. The stock market, the NASDAQ, the S&P, bigger bounces than crypto, at least in terms of Bitcoin percentage-wise even. So that's pretty wild to see. But I do think it's the calm before the storm for crypto. I do think you're going to get more volatility. I think there's a couple reasons why it's been so quiet the last few days. So number one, tomorrow we have Jerome Powell speaking from Jackson Hole. So Jackson Hole, for people that don't understand that, it's basically the place that all the Fed presidents convene. They go to Jackson Hole, I think it's Wyoming, and they all sit down and they powwow about interest rates, about the economy. And then basically Friday, I think it's 10 a.m. Eastern time, Jerome Powell's going to make a speech. And the market's going to be looking for that, and Bitcoin's going to be looking for that, or at least investors in Bitcoin. Is he hawkish? Is he dovish? Is he kind of hawkish? Is he a little bit more dovish? And whatever he says, you're going to see a reaction in the dollar, and then likely crypto will go in the opposite direction. So I think overall, also the other thing is that there's a lot of investors that got burned in crypto because of Celsius and because of a couple other things. And so I think a lot of money has gone towards the stock market right now and has stayed away from crypto. In addition, we're waiting for this regulation. What the heck are we going to do? We know Gary Gensler says Bitcoin's a commodity, but what the heck is everything else going to be? What type of regulations are they going to bring in? And that's keeping a lot of money on the sidelines at this point as well. So there's a lot of things that are kind of keeping Bitcoin and crypto traders on the sidelines. And I think it's going to start to become clearer in the next week or two. And I think you'll get some more volatility. So I would favor a short-term move up maybe on Bitcoin in the next day or a few days. And then I think the resumption of the downtrend continues. So if we go to the charts here, let's take a look at these fun charts. Basically what you have is you have a macro pattern, and I'll do a little bit of teaching for everyone out there. So a macro pattern is basically the bigger pattern, and then you have a micro pattern, which is the pattern inside of the bigger pattern. And what you can see here is basically we have, let me get my trend lines up here. You basically have the bigger pattern. This is your bigger pattern down here, and then sideways, right? This is in spirit of what we would refer to as a bearish pattern, in spirit of bear flag. And we've now broken down again, and now you're forming a new bear flag in spirit of bear flag pattern, right? So you got a bear, a macro bear with a micro bear. So you have two bears, which is never a good thing, right? So that's a little bit scary. But what I said before is that short term, I'm a little bit bullish, and this is getting a little bit more wacky. But look at this green candle here, and then look at this mini micro, and this is getting weird, right? A little bit of bull, right? So you have the up move and then the sideways consolidation. So what this tells me is that the market's anticipating maybe a quick move up, but then the bigger micro pattern and the macro pattern will likely take it back down. So I guess to summarize this, you'd look for a very short term, maybe a next couple days bounce in crypto, maybe if we're lucky back to this trend line that was broken. So this would be kind of a retrace to the breakdown line right here. And then I think we roll over and the resumption of the bearish pattern takes us down to here, which is the 2017 level. And then ultimately, I honestly am still in the camp that we're still headed even lower, probably 12, 13,000 at minimum on Bitcoin. And just to be clear, that's kind of my best case scenario is 12 to 13,000. My worst case would be like 3,500 or so. So hopefully it's the best case. But again, as a trader, we always have to prepare for the best and the worst case. You just can't kind of stick your head in the sand and say, oh, I'm only going to believe in the best case. As a trader, you have to mitigate risk. So you have to prepare for the potential for the worst case. Yeah, but for me, it would be much, much lower. Like, honestly, 10,000 would be very good in terms of washing out a lot of the weaker hands. So for instance, I think there's a lot of investors, and if you look at Bitcoin right now, we just went from 69,000 to 17.5, and I still didn't get the sense, and you might agree with this, I don't know, but I didn't get the sense that people were like giving up on Bitcoin, right? And in a bear market, that's the kicker, right? If you go back to 2009 when the stock market bottomed at like 6,600 on the S&P or whatever it was like people just didn't even open up their portfolios anymore. They were like, I'm not even going near stocks anymore. But you don't have that in crypto yet, which to me says you got to go lower in this bear market if it's a true bear market. And so I'm in the camp that 12, 13,000 is the high end target. But in all fairness, it's very likely that the powers that be, the psychological breaking point is probably that 10,000 level. So I would say that you probably have to go even below that to really flush out all of the weaker hands before you get that final, bottom being put in. And so you have to think that, Bitcoin could easily go down 95%, and then it could go up the same amount as Amazon if it proves itself to be that digital gold. So for me, I wouldn't give up on it myself. I still think that the fiat currency issue is not going away. The Fed right now is putting up that strong front. Oh, we're going to stop printing. Well, yeah, it's easy for them to say that when unemployment is like 3-4%, right? But ask me this: when unemployment goes to 10 or 15%, are they still going to be like, no, we're not going to print? They're going to print again. Come on. So I think that's the kicker, is that you just look at that aspect. And I think you have enough big money starting, like there's big names that are investing in Bitcoin to the point where I really do think there is a future for Bitcoin, even if it gets flushed out. And honestly, the key for investors is to just remember it should just be a portion of your asset allocation. It shouldn't be everything. You never want to have all your eggs in one basket. I know you preach this, but you should have your stock portfolio, your crypto portfolio, your real estate portfolio, your this, your that, your gold. And this way, if by chance it does end up being worthless, it sucks, but it shouldn't break you. Honestly, I've never met an emotional investor who ended up making a lot of money long term, right? So that's the kicker. And just always remember that, folks, is that emotion is your worst enemy. You should never fall in love with anything. I mean, listen, a human, okay, fall in love with your significant other. But when it comes to investing, you have to be always very robotic, because inevitably when you put all your eggs in a basket, maybe the first one works out, you make a fortune, but eventually you're going to hit one that's wrong, and you can't let that wipe you out. So, you definitely, it's a scary thing. I always say to people, no investment that you're making is going to love you back. It is just an investment, right? I mean, no, you can't say Shiba Inu loves you, yet, right. So why would you love it? Love something that can love you back, and no asset you're investing in is going to love you back. Definitely diversifying among multiple assets is the main one. But I'm the same way. Like in my portfolios that I manage, it's about being long certain things, but also being short certain things. Like going into the stock split on Tesla, I was short going into this morning, right? And looking for that pullback that, you had this run up into that stock split that it had today. And then you just figure, okay, it's run up, it's going to sell off. And it did. And then I also had long positions in stocks as well to kind of compensate. And luckily, you get that drop, and then you get sometimes that pop in the other names as well. But if the market tanked, at least Tesla would drop, and maybe the others would drop, and it would kind of hedge your downside. So I think long short is the way to go. If you're right enough, I mean, listen, if you're a 50-50 trader, then yes, hedging's the way to go. If you have the skills, if you have the ability to read charts, then hedging with options to me doesn't make sense. Started out stocks. I had about 15 years under my belt in stocks before I branched into crypto. And it's almost identical. And this is why I got to convince you to trade stocks, Frankie, because if you're a technical guy, and everything technical applies to any chart as long as it has volume to it, right? So just like you can't trust a coin that trades a couple $1,000s a day because it's so thin, you would never do that with a stock that just trades a couple hundred shares or a couple thousand. But if you're trading like Apple or Microsoft or Tesla, the charts are the same, because the beauty of this, and I know you know this, is like, when you're trading charts, you're trading human emotion. You're trading people's emotions. And so people's emotions in crypto, the only difference is people are more emotional in crypto than in stocks. So you get a little bit of a wilder swing, but the levels are still the levels, and the levels will work and the technicals will work. So let's do it right here, right? All right, so here's the S&P today, right? So the S&P today opened here, it ran up, which was a beautiful run, and then it pulled back. And there was one trade that I took today that was just, I mean, it was just classic charting, right? So take a look here. You have this line here, and then look at how the market pulled back, and then you bounced right there. So all I did was I grabbed the S&P right there, and there's your little gain. Classic day trade. But like this could be a chart of Bitcoin intraday, and it would be no different. You would do the same thing. It broke out, retraced to the support line. You can see the pivot and the pivot, and then boom, and then it actually did it again here before rallying sharply into the end of the day. And then of course you don't get this in crypto, but there's something called a gap fill. This will be a big resistance if we go there tomorrow on the S&P. So again, you know, the point being is that it's the beauty of the charts is that you're basically trading, millions of investors are buying and selling in here. And it could be Bitcoin, it could be S&P, it could be Microsoft, Tesla. It's all the same. It's all the same human emotion going on. Greed and fear, greed and fear. And yeah, man, it's cool stuff. I'm not so much a breakout trader unless you get a really good quality bull flag, because by the time the breakout occurs, I always feel like I'm chasing, right? And I hate, like, if there's one thing in trading that I detest is feeling like I'm getting in late to the party. I'm always the one that I like stepping up first. And again, I use the charts to do that, but that gives me the maximum reward with minimal risk, because I'm always, let's say I'm buying at a level, right? So I'm buying at a multi-factor support level. So I know that I'm buying right at support, and if it breaks and confirms, then it fails. And I just exit for a small loss, versus then at least if I'm buying there, the upside is maximum. Once something starts to move up, it's like, okay, well, 1,000 traders already just got in before me. I hate being that person that's late to that party, right? And I think honestly, most new investors, like myself included, when I first started, that was what I did. I would see something running and I'd be like, I'd try to catch that lightning in a bottle. And then I kept on getting burned. I mean, think about people that bought Bitcoin at 65 or 67 or 69,000. I mean, you're chasing at that point. It's already up monumentally. And it seems like, yeah, it keeps going. Maybe everyone else seems to be making money. You're seeing all on social media, people showing off their Ferraris, and you're like, oh, well, this is a no-brainer. And then you get burned. And I'm sure everyone's had that experience. And so it really does. It's like touching the hot stove over and over again. Eventually, you're like, all right, that's not working for me. I keep losing. So how do I fix that issue? And I think self-reflection is a big part of being a good trader. You have to be able to look at yourself and say, okay, what am I doing wrong here? What's not working? I'm a big fan when you're a beginning investor, a trading journal is unbelievably important, because you basically want to write down what you do wrong and then review it. And you want to say, okay, why didn't this trade work out? And number two is, when it didn't work out, did you exit quickly when you recognize that your thesis failed, right? So there's multiple things, but I do think that trading journal for at least beginning traders is so important.